Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, we had an auction of inflation index bonds worth 1,000 crores held yesterday by the Reserve Bank of India, due to which we witnessed some strength in the Indian rupee against the US dollar. However, we do not see much strength in this particular rally, in yesterday's rally. Traders can go long in the dollar rupee pair at around 59.75 levels in the spot. Now, fundamentally, if we analyze India's economic situation, there are many factors which can play spoilsport to any strengthening in the Indian rupee against other currencies. Now, the prime being the current account deficit, which after hitting a high of 6.7% of GDP in the October to December quarter of 2012, is expected to improve a bit in the Jan to March 2013 quarter. Now, we will be getting the official figures this Friday. However, the current account deficit for the current quarter is expected to be much worse. Now, we will get this figure 3 months down the line. Now, the second factor is India's trade deficit, the biggest component of the CAD, which rose to $20.14 billion in May from $17.8 billion in April. Now, with rising imports and falling exports, the economy is in a very tight spot. Now, though we may argue that all emerging markets have witnessed FII bond market outflows on a large scale, the recent sell-off of around $5.4 billion in bonds seems to be pretty alarming. Now, the last and major factor is the political situation in India. With next year being election year, we do not see any strong rally both in Indian rupee or Indian equities till the run-up to the elections is over. Now, looking globally, well, the euro-dollar pair it moved lower and is currently trading at 1.3060. Now, markets seem to have restored back to normalcy after the Fed's much hyped meeting. Now, we have the GfK German consumer climate due today, and this set of data comes in lower than expected, and we can see a further drop in the euro dollar pair. Now, the ECB president, Mr. Draghi, delivered a speech yesterday. However, besides the routine eurozone strength and defense of the ECB actions, there wasn't anything which could move the markets. Now, if the euro dollar pair manages to break the 1.30 level, then we can see it move to around 1.2800 in the short term. In rupee terms, traders can short sell the pair at around 78.20 to 78.10 levels. Now, the pound is trading lower at 1.5430 against the US dollar as compared to yesterday's high of 1.5410. Now, after the comments from the outgoing Bank of England Governor, Mr. Mervyn King, about the misinterpretation of US Fed's remarks, we expect some pullback in the pound-dollar pair. In rupee terms, traders can go long in the pair at 92 levels in the spot. Now, we got some good numbers from the US yesterday, with the new home sales figure coming in at 476,000 versus an expectation of 462,000, and the core durable goods orders, which came in at 0.7%. Now, every set of positive data increases the Fed's expectation of economic improvement in the United States. Now, we have the crucial GDP figure, which will be out later this evening, and we might see some huge movements in tomorrow's opening. Now, we expect the yen to move back to the 95 to 96 level. However, we advise our traders to watch out for the US GDP figure, as there are chances that we might see the dollar strengthen if there is a greater than expected positive deviation in this number. In rupee terms, traders can go long in the yen rupee pair at around 61.37 levels. Now, with the spike in bond yields across the globe, we are in for some hard-hitting times, as investors prefer to sit on cash in such turbulent times. So we'll see a lot of more withdrawals from markets in the coming few days. Now, the recent Chinese credit crunch has only added to the already prevailing fears, more due to the interbank market prevailing in China. So we advise our traders not to go in for any large positions or overnight positions, but restrict your trading more for intraday basis. And as and when we come across any opportunities, then we can go in for a big trade and go for the big kill, that is. Well, that's it from the Currency Advisory Desk. Thank you.